Hi, everybody. So happy to be back at NAREP with all of you. I'm just so proud of how much you've all grown and everything you're all doing. And Joe, thank you for saying what I was feeling, which is no matter how much we work and we do the best we can with real estate, and you know that I always say, last time I was here with all of you, I said, don't buy shoes, buy buildings. But even with all that, we feel like hamsters sometimes in a cage going, how come we still don't see the money? We're paying so much out in taxes. Laws are changing all the time. And Julio, I am just so happy to introduce you to everyone. I am such a fangirl of Julio's. We just wrote this book, but really it's Julio's life's work. I'm just the fangirl that's promoting him, because when I heard him speak a year and a half ago, I thought, oh my God, I thought I knew so much, I know nothing. And I begged Julio, we have to write a book together, because everyone, and particularly our Latinos, need to know what you know. And you know, Julio, I want to start with you and your mission, because I know that for you, that you're such a mainstream person. You do the taxes of billionaires, of corporations. You work at such a high level, and yet you're Latino. You're another one of those Latinos that's been a hidden figure that we didn't even know existed, because you're so behind the scenes and quiet. But yet the work you're doing is so powerful. And I'm just so proud that we get to bring it to our Latinos first. So I thank you for coming here and for doing this work and showing us how can we be better. So tell everybody, because I know this is part of your mission as well, and something you've been concerned about, knowing as much as you know about taxes.
You know, I started my tax career in 1980, and for 20 years I helped billionaires, Fortune 500 companies, C-level executives mitigate taxes. And Nely, I think you and I know this. I felt a deep concern that we didn't have tax equality in our country, especially in our Hispanic communities. And I knew that that's when I started my own company in 2001 to make sure that I brought that tax incentives and grants and tax credits to the accounting communities in the minority areas, so that all minorities in our country could have the same access to the tax code. That's been my mission for 40 years now.
Thank you. Well, there is a lot of disparity in, you know, it's so funny because I think I told you that how the whole thing started bothering me is the kids in my office, when they would hear that, you know, different people would, like, billionaires don't pay taxes, and they'd go, that's so unfair. And in my heart, I knew that no, they actually have figured out legally how to do this, and that the rest of us there must be a playbook and we don't understand it. So I think you and I have put together, with your work and your life's work, because I'm really, again, I'm the fangirl here, a playbook of what we all should do, so that actually, you know, you said something to me that changed my life. You said, Nely, if you had taken the money you've made the last 20 years, and instead of like paying taxes much, and I thought I wasn't paying as many taxes because I was writing a lot off. If you had done all the right things, you would be a billionaire by now. And that was so shocking to me. And I thought, God, we still don't, like, our community doesn't know how to do this. So we don't have that much time today, but first of all of you see that there's a QR code here. We are going to give every single one of you, before the book ever comes out, you're going to get the digital copy. So make sure you take that QR code and send us your information, and you're going to get the digital copy. And you've also said you're giving them something else today. What is it?
Yeah, basically, I invested in AI to basically uncover every state incentive, state grant, credit associated with investing in real estate and owning businesses. And we want to make sure we give all those to you, those reports, free. I mean, we charge a lot of companies a lot of money for these reports, but our friends here at NAREP, we would never charge. And ultimately, you just share with us your information, and within a day, we can tell you all the missed tax credits, incentives, grants that are associated with any properties that you're selling, buying, or investing in. And I think that's so important. We got to bring that tax equality. We got to democratize the tax code. We all have to have access to this. It's getting a little bit easier with A&I, but now we have to make sure we share this and lift everyone up.
So what we're going to try to share with you today are the 10 most important points in the book that we're putting out in the next 2 months. And we're going to try to cover them, but then you'll get the digital book and we'll go deeper into it. So let's begin, because there's so much to cover.
Okay.
First, you say that the most important thing we can each do is create a tax mindset starting January 1. And that is a real shift, because we all really don't want to even deal with taxes. And by the end of the year, we're going, oh my God, what have I done? Explain what that means, creating a tax-first mindset.
I think what that means is we have to think of taxes like we do diet and exercise. It always has to be part of our life, because when people come to me, it's because they're in pain, right, Nely? They're paying a lot of taxes. When I met you, you were in pain.
I was in pain.
You were paying a lot of taxes.
We're going to talk about that, yes.
And you don't have to. You can do tax planning throughout the year. You can be proactive with your taxes. You can work proactively with your accounting friends and teams. And you can go online and research opportunities. You can work with people like us. But as you're accumulating income during the year, you're accumulating taxes. Now, the IRS tells us how to eliminate taxes. Unfortunately, most people don't plan to use those steps to eliminate the taxes. They kind of reactively get with their accountant at the end of the year. Well, by then it's too late.
So what I heard you say to me was that instead of being strategic and coming up with like our own business plan for our money every year, that what we all do is just get afraid of it and sweep it under the rug, and then it becomes a reactive problem. And we're going to talk about how do we actually do that. So that leads us to the second point, which is you may need a new CPA. I think, talk about that, but let's talk about the metaphor you gave me of last century, that a century ago there was one doctor in your life in a small town. And what happened over 100 years? Yeah,
it's evolved. Right now we have telemedicine, we have specialists, and it's the same with tax. You know, have a good proactive accountant. If you don't, if the accountant's not reaching out to you and helping you or helping your clients with the tax situations involved in investing in real estate, then maybe you have to find someone that's going to be proactive, help you, help your clients, help your investors. Because when you're buying real estate, there's at least 50 tax credits, incentives, and grants associated with buying real estate. And most people in our country don't use it. So make sure you have an account that not only is proactive, but has specialists, has engineers like we are that help erase some of those taxes that are built up during the year.
So let's go deep in what that means. You told me specifically that in my case, I had a CPA for my whole life, which most of us do. And my CPA was a specialist in entertainment. And over the years, as everybody knows, because I always say I bought buildings and I've made more money in real estate than in my TV life. And my business had become more real estate than TV. And yet my CPA really didn't know a lot about real estate tax. So in my case, I probably had outgrown that CPA. But you also say that the last 5 or 6 years, there have been so many changes to the tax law that almost no CPA can fully be a strategist alone. Because for instance, your company, I think when you hear you're a tax engineer, which I didn't even know what that meant, that is not a CPA. You're not the one doing the taxes. The way you work with Billionaires, and you correct me if I'm wrong, is you have hundreds of people that work for you that are each specialists in the tax code, in different tax codes. Many of them are former IRS employees. So you do the preparation, the strategy for then the CPA of a billionaire, for instance.
Yeah.
And you give them the tools to fill out the forms. The CPA becomes a form filler. But I don't think any of us thought that we were going to have to hire a CPA and then a tax strategist, right, guys? I didn't know that. So can people like us even afford that?
Well, I mean, the great thing about when we work with accounting firms, we work with several thousand accounting firms, but you know, the work we do is paid on success, right? So if we're not finding money, we're not getting paid. That's the great thing. So can you afford us? Yeah, everyone can afford us because we're going to get you 10x what we find. And that's really how we grew our business, working with accounting firms and being a resource to them and their clients and trying to bring that tax equality. But Nely, we found out over the last 5 years, not everyone's using accountants anymore. They're going to the internet, they're going to social media, but we want to be a resource to everyone. We want to be an Amazon to make sure that all of you that are investing in real estate take advantage of all the sea of tax
So
credits
I
and
remember
incentives.
that when you and I started talking, I was afraid to tell my CPA I was talking to you like I was cheating on my CPA. And you said to me, no, let's get on the phone with the CPA. I'm a resource for your CPA. The CPA should not be feeling bad. And you were so nice to the CPA. And I was mad because I felt like I had left so much money on the table. But so the key of the relationship with your CPA and the relationship with a strategist is something that most of us, I don't think, even knew we had to do. But I think what you're saying is things have changed so dramatically that it's almost impossible for a single CPA to know everything they need to know to serve you properly.
It's hard for CPAs to know 1 million pages of tax code. Our tax code has grown so much, especially over the last 5 years, like you said, because every president who takes over wants to have massive changes to our tax code, especially in real estate. They want to move it from one side to the other. So yeah, it's hard to beat that. So you got to have a specialist.
So another thing that we say in the book is to optimize your income with the mix of W-2 and 1099, meaning if you're in a family, and I think a lot of you know this, so we don't have to go over this a lot, but if one person is working in a company and both people are working in a company and both W-2'd, you're pretty much screwed for taxes. So can you talk a little bit about that for anybody that doesn't know that?
Well, yeah, I mean, it's nice to have your own side hustle or some 1099 company that you've started where you can maximize tax deductions. I always say tax mine first, but what I mean by that is let's not write a check, let's not use a credit card without having a business purpose in mind that we can use for taxes, right? So that we can have the government contribute to our businesses like they want to do in the tax code. But we can't do that all the time under a W-2, but with the 1099, like real estate and income from a job, now we can start combining those and take some of the losses and offset the active income.
Sir, if your mate tells you they want to go start a business, tell them yes, because
Yes.
it's
Run.
going to help
Yes.
us, right?
Yeah.
Okay, this one was a game changer for me. You said, and this is what really our book is based on. You said, let the IRS playbook guide your investments. Meaning, and this was the one that I think I had really missed in my tax preparation. You said, the IRS tells you every year what the government is investing in, and therefore what you need to invest in by telling you which are the things, not just like tax incentives, but which things they're really going to pay you back for if you invest in. Not just real estate, which we're going to get to later, but things like oil, like electric energy, like you talked about, which shocked me. You said animals.
Yeah.
Can you
animals,
talk
yeah.
a little bit about that?
Well, first of all, our tax code basically says that there's certain things we can invest in and expense. We can't buy a bond, we can't buy a stock and expense it. But real estate, you can buy real estate and expense 100% of it. So what a great tax benefit. So if you're buying $1 million of real estate, you can write off $1 million of real estate. That's a great start, right? But you don't always get to buy real estate. Inflation's high, interest rates are high sometimes. So yeah, the government says if we do things in alternative energy, solar, there's tax credits there. Same with oil and gas, same with wildlife animals. If we save a wildlife animal, an extinct animal, or animals becoming extinct, we can have tax credits associated with that. Sometimes you don't buy real estate, you buy a jet because that's the only thing available at the time, and there's great tax incentives with that as well.
Well, you use an example for yourself, like so to explain it to me, that if you have, like the year where you owed $1 million, and how did you deal with that $1 million?
Yeah, in 2001, when I started the company, I had $1 million due to the IRS, and I took that $1 million, and instead of paying the IRS like a lot of people would do, I took that $1 million and put that as my down payment for a $5 million apartment. Did the cost segregation study, right?
We're going to talk about cost segregation in a moment.
And with that, I was able to eliminate the taxes. So I traded a $1 million tax liability for a $5 million appreciating asset that today is worth well over $50 million. And that's what real estate professionals do and real estate investors. And that's the message we got to take to our communities. Why would you invest in anything else when the government says we can write it off? We're going to get the income, the appreciation, And we're literally just trading tax liabilities for appreciating real estate assets.
Okay, but let's talk about that. You said that you took that money and then you invested it, and then the next year you did the same thing and invested it. What did that $1 million turn into over less than a 20-year period?
Yeah, today 50 million, but I did that every year, right? Whatever taxes I owed, I took that same money and bought real estate.
So let me say how I heard what you said to me, because to me that was the shocker. You basically said if you take the money that you owe the IRS and find a way to, get write-offs for that money, you get the money back. Instead of keeping that money, you reinvest it in something that the next year will give you a write-off. You're compounding the tax money you owe to the point that that's why you said to me, if you had taken your money and kept compounding it every year by paying things that you get given the money back and investing that and continue to invest it, you would have been a billionaire. And I don't think anyone ever told me, certainly, but any of us, of compounding your tax money to become a billionaire, and that's how billionaires do it.
I see so many people unnecessarily just pay 50% of their income without any tax planning, without investing in real estate or other alternatives. And imagine what that could have been for them. We see this with athletes every day. When we're working with athletes and they just pay 50% over, or other successful business owners. And it doesn't have to be that way.
But I love the example you give too, that like one year you couldn't buy real estate because the interest rates were too high or whatever. What did you do with the money you owed to the taxes that year?
Well, that year I bought a jet, because you can buy a jet and write it off in the first year, and then you put it into charter, so it becomes real estate in the sky.
Okay, I don't think any of us think we can go buy a jet, do we? But you did, and you call it what? You call it the Airbnb in the air.
Yeah.
And by the way, you're also not grandiose about it. Like, you often don't even use the plane because you really want to make money off of it by renting it.
That's
right?
true. Yeah.
You came here commercial.
Yeah, that's true.
So I guess I think of things like that as grandiose as an immigrant, but because you've revisioned it, you look at it as like, no, I need to keep buying assets, right?
Yeah, and that could be your own business too, right? So invest in your business instead of giving it over.
Okay, the next thing that you said to me, which we're going to say, we obviously already heard you say real estate is the ultimate wealth strategy. We are in a very tough moment in real estate. And in full disclosure, I'm going to use myself as the example because this is how we met. I came to you with a horrible $400,000 tax bill from real estate stuff that I had. And you said to me, why aren't you depreciating these buildings? You haven't depreciated these buildings that now the tax law allows you to depreciate them in 1 year. And you said there's a strategy called cost segregation. I know we can't get into it deeply right now, but can you explain that? Because I think this is the single thing that everyone in this room is going to love. I just want you to know that by cost segregating my buildings, he wiped out my tax bill. I got on top of wiping out a $400,000 bill, I got $50,000 back and a $150,000 tax credit for next year.
Yeah, well, I felt good about that.
I feel really good.
That was a good time.
That's why I'm your fangirl, because I know. But it did cost me money because I had to do a report. You do it okay, explain cost segregation in the simplest way, and then people can ask him later how you do this.
Yeah, so the government allows us to write off real estate over 27 and a half years for residential properties, 39 years for commercial property. But back in 2000, we basically had the IRS change the code so that we could do an engineering study and determine what parts of the building would exhaust much quicker than those periods in the things that are non-structural. And so through an engineering study, we do those and figure out, quantify what that is, whether it's 30 to 50% of the building, and that we get to immediately expense, we get to accelerate that depreciation. So that's the great thing about real estate. We get to write it off, but a lot of it we can write off much quicker up front through the studies.
And the way you did it for me, you said to me, well, now you can either sell these buildings and buy new ones, or you can remodel these buildings and then depreciate them again.
Yeah.
Depreciate the remodel. So it's just a way of thinking that was so different than I was goody two-shoes me, doing everything like I think, but I didn't realize that all of this is so kosher, so legal, so fine, and that you also guarantee it so that if something goes wrong, you're the one that goes to the audit.
Yeah, yeah. I mean, fortunately, what we do is very, it's mainstream with the IRS, and we've been doing it with them for over 2 decades. So I think it's pretty routine. We don't see a lot of that activity.
Okay, we don't have a lot of time, but I want to get through all of these so you guys all know. Not all investments are equal, meaning that when, I think we all, I laugh because I always say, when you go out to lunch with somebody, we all think, oh, it's a write-off, great, we're gonna, and that's not 100% write-off. And every single thing we write off is a different percentage. And you say that you have to look at that very carefully in planning diversely your tax credits.
Well, I think the great thing about real estate is we can buy a $5 million property, put $1 million down, leverage the rest through a loan, right? So we're only putting $1 million down, and maybe that study creates $2 million in write-offs. So leverage is key. And you don't get to leverage a lot of things, but you do get to leverage real estate. I think that's so powerful.
And you can ask him more later, but let me keep going because I want to get through all of them. Don't buy or liquidate assets unless you understand the tax implication. So I'll use myself as an example. I was in California with all my buildings in California, and during the pandemic, I didn't get paid. I was freaking out. I'm like, should I sell these things? And you don't realize that maybe that year, that's a mistake. You're not thinking strategically, and you're really trying to convince us to always have a long-term strategy so that you can plan that the year that you liquidate something and it's a loss, you needed a loss, or a year that you liquidate something, if it's a gain, you have time to 1031 exchange it or do something. And sometimes we get scared, and again, as Latinos, as immigrants, we get scared, we make a bad move. So can you talk about that?
Yeah, I think, just as you said, we have so many opportunities to sell property. But let me give you an example. If you have a primary resident, that's the only asset that you can't depreciate because it's not a business, it's your actual home. But if you were going to sell your primary residence and you're going to have a big gain, you may want to think about turning that into a rental property
like I
over a year, in the next year, not make it your primary resident, and then ultimately you can 1031 that, sell it, and that $10 million in taxes you would have owed, now you don't owe because you converted to an investment property and then 1031 or did some other types of tax structures.
The other thing we forget about is to distinguish between an active and a passive investment. Can you talk about that?
Yeah, well, with real estate, if you own the property directly, obviously it's an active activity and you get to offset any losses from that active activity. You can offset W-2 income, right? So that's active as well. Passive is when you invest in other people's real estate and you don't manage it. And so passive losses can only offset passive income. So you have to know which income you want to offset. Most of my clients have W-2 income from one other business and they're like, okay, I have all this tax to get rid of. Well, then you have to be active in real estate. And that's, whether that's your wife or your husband or someone in the family, or you become active as well.
So we have to keep track of the hours we spend because there's a certain amount of hours you have to be to make it active, right?
Yeah, but again, real estate's the best way to offset active income if you can get active in your own real estate. And if you're a real estate professional, you qualify as well.
Okay, the next one is prioritize asset protection. And I love this one because, again, you've gotten me into this in a heavy way with our friend Hillel, that how do we protect our assets also by the trusts we put them in, by the corporations or the LLCs we put them in, but also insurance. Also, there's a lot of problems. We heard today on the news that insurance has gone through the roof and a lot of people are deciding to insure their own properties. What is the importance of this as much as planning your taxes, prioritizing protecting them?
Yeah, I think the biggest thing with real estate is putting it into a corporation, whether it's your personal residence or an investment property, because again, that gives you the shield against your personal assets that no one can come after you, if anything happens. So that's the most important thing, number one, right? And then what kind of corporation, that has some rules too. And then what state do you want to incorporate, and that gives you further protection. And then there's other trusts and things that people put it into even give further protection. I mean, it's a long, complicated answer, but You know, in our book, it's going to outline that for everyone.
But you
and I
talk a
think
lot
that's good.
about basically that we need a team. And sometimes, again, I can speak for myself. I feel like kind of like frugal about this. Like, how many people am I going to, like, and who do I find and how do I find these people? And you know, I've been very lucky because you've helped me find a team because I moved from California to Florida. But it was really hard to figure it out and to understand it and to do it. But you say it's very important that that's work that's kind of very, very important to us. And also that I said to you, I feel like it's unaffordable for most people. And you said that it's more of an investment. We should see it as an investment.
Yeah.
Can you talk about that?
Yeah, well, I think for all of you here, it's so amazing to be part of this organization and see everyone here. You're already here because you're investing in yourself. You want to be better. You want to help your clients be better. And this is where we come together to share. Because hopefully, just coming together in these types of formats that NAREIT allows us to do, allows us to share good information. And that's so helpful, right? Sometimes you and I are mainstream. We left our communities, but we need to come back always to our communities. And it's that sharing, it's that education that we knew 18 months ago when we met. There was a huge education gap between people that knew the tax code well, especially in real estate, and people that don't know it well, which is a lot of people, right? And we've got to lessen that gap. This is why we're here. That's our legacy, right?
It is our legacy.
Help bring our Latinos
and that's
up.
why I pushed you to write this book, because I knew we needed to know. Also, it was so painful for me, I have to be honest with you, when I first met you, because I think I'm such a goody two-shoes and I try so hard and I'm always learning and I go back to school and I thought I really knew what I was doing, and I feel like we're always climbing a mountain to be masterful. And I felt like this was the last hurrah that none of us really know, and that no one really talks about what it really takes for billionaires to be billionaires, and that's why we don't even think that way. But yet, you've made a lot of money, you've used all these things for yourself, you are around all billionaires, you've normalized that, and you make me feel like I could be a billionaire too, and I just love that about you, Julio, so thank you so much.
We all should be.
Yes.
Yeah,
now,
thank you.
the final hurrah in the book is estate planning starts now. And I told you that I was just with a very, very wealthy girlfriend of mine a couple days ago. And she goes, you know, I think, you know, for a Latina, we don't like to talk about death. And I know the tax laws are about to change and the wealth gifting is going to change, but I haven't done anything yet. And it was kind of shocking to me. Because I kind of did this, maybe because I'm a single mom and I wanted to take care of my kid, but I've done this. But so many people kind of leave this for last. Talk about what you've witnessed, because you've witnessed horror stories of people that pass and what has happened to their families.
Well, we see this all the time in our community, right? The family passes on the assets to the children, and the government at that point, when you inherit the real estate, they step up the basis for what they perceive the value to be, and typically they tax on that difference. And ultimately, we see a lot of the children, right, in our Latino communities have to sell the properties to come up with the taxes to pay for it. And that doesn't have to be, right? We can put these properties into estates and trust and pass them on without having to put that burden on the children. And I think that's very important as you and I are getting a little bit older, right? But sharing that information so that we make sure that we transfer the property, you to your children, and tax-free, and make sure that they can preserve it for the next generation.
I want to leave everybody with the QR code. We're going to send you all the info. Julio's going to be here. Julio, people can't afford you and your team?
Yes, we're paid on success.
And also tell them about, you just kind of mentioned it, you bought an AI company that is going to bring this information online to the masses. Just leave us with that info.
Yeah, just go to that code and we'll make sure that for any property you're buying, any business you're in, if you have taxes due or you want to take advantage of grants and incentives, especially in real estate, there's so many cities, so many local communities that give so many grants and tax credits and incentives that no one applies for. Who applies for them? It's the big corporations, right? They take all that grant money and incentives for real estate. But we're all have equal access to it. And this report will generate it for you in seconds.
Thank you for all that you brought to me. I just want everybody to know, I feel like I can be a billionaire, and so can you too. And thank you, Julio, because this is the key to the story.
Yeah.
Thank you.